So today we're looking at the specific space that most of the people on this call are in. Basically, the space I think that Cargas is really the bread and butter solution for. So we're looking at more of the downstream oil and gas industry, and we're going to look at some of the general tax compliance challenges that are faced in that particular space. And then we're going to look at some information that we think would be really useful to you guys, right? Recent tax content changes, a lot of the stuff that it's hard to keep up with, and staying abreast of those changes. We'll talk a little bit about Avalara's specific integration with Cargas and how, as a combined entity, we're able, or combined force to be reckoned with here, how we can service the space that you guys are in. And I'll do a couple of slides at the end, just in case anybody is not familiar with exactly what the returns excise solution does here at Avalara, what we can sort of do for you by leveraging our relationship with Cargas. So first, we're going to look at challenges that are faced in the downstream business. And it's funny, I've done a couple of conversations or webinars or white papers in the past about the downstream market. And there's a lot of what's kind of funny. We notice this on the Avalara side. We notice this during our sales cycles. We notice this during partner meetings and presentations. Attending various industry events, tax and industry events. The downstream space is basically just as difficult and just as complicated as it is upstream, right? A lot of people think, if I'm owning a corner retail store, I'm doing home heating service, or I'm doing natural gas retail, end user sales, things like that, that I should be. My business model is not as large or complex as like an ExxonMobil or somebody upstream of the super majors. And what we really find is that might be true at a completely organizational level, but tax is just as hard downstream as it is upstream. When you start getting downstream, that's where a lot of those end user sales start to come into play. I know a lot of people that I've encountered through our relationship with Cargas have to start looking at, well, not just fuel and excise taxes. Now we have to worry about sales and use taxes. You've got all these end user sales, and there's just a very different space as opposed to trading upstream, where everything is moving around by pipe or barge, and most things are going to be tax free, and you're not getting into wacky exemptions and things like that, right? So first thing I kind of want to note, I want to leave you guys with, and would ideally love to hear some questions or comments about at the end, is this space really is just as complicated, if not more so. And I think really what we then start to find is, well, do we really have the organizational support though? Do we have the teams in place? Do we have the best practices in place to really account for that, knowing that complexity is still there? Number one is definitely data and IT. And particularly on this topic, we'll revisit how to address some of these concerns when we get to the back half of the presentation, and we're talking about Cargas and the Avalara-Cargas relationship. But in general, everything really starts with IT, I think we've found. And there's knowing how good your data is upstream, knowing how many processes are in place, what sort of checks and balances you have, what sort of holistic data cleanup you have upstream, makes things a lot easier when you get when you actually start talking about your data. So now I'm not just talking about up and downstream fuel, we're actually talking like up and downstream data, right? Like that starts directly from the accuracy of your tax setups. Who's owning those? What sort of knowledge does IT have when we've set up those various accounts for you? And again, I think you guys can probably start to see, I know I've seen a lot of traction recently with customers that either we have or prospects have been moving to Cargas from other systems. So there's definitely something to be said for moving towards a system of record that has an understanding of these types of pain points. And so again, we'll come back a little bit to how we're resolving that later. But do you have a system that enables you to set up taxes in a clear and transparent manner and easily update those? Are you hand coding individual accounts the way that they're supposed to be taxed? Does your data and your IT support enable you to turn taxes on and off based on licenses and exemptions, or is there like a drawn conclusion? Is there an identified reason why a particular tax has been charged or not charged, right? And part of this starts to roll into not just your IT software support, but the people that are doing this as well, right? Is who owns that? Who owns those setups? Is this something that is set up by IT? Is this something that's owned by the tax team? And we really see that the the better your data is from the start, and the more forethought you've sort of put into accounting for all those different taxation situations, really makes it a lot easier when we get to the back end, 30, 60 days later, when we're trying to file our tax return. A great example of this, for example, this license and exemption capture. We've seen a lot of processes where you've got your, let's jump to maybe 60% of the ideal and assume that you have a standardized data extract that comes out with basically all the information you're going to need to at least get onto your tax return, your mode codes, your products, your units, right, your origin, your destination. Then the next question becomes, well, how do I know which of these were tax-free or tax-paid, whether it's a purchase or a sale? A lot of times we see that there's no IT infrastructure in place for that. And what we have is tax analysts are able to file the tax return because they just quote unquote know, right? I just know that this list is my taxable, this list is my tax-free. Maybe you've got a government list, right? At least that has registered suppliers and distributors. But then that list typically, from what I've seen, those don't go down to the level of, well, who are your agricultural exemptions? Who has your off-road exemptions? Chemical, government entities, things like that. And if none of that is captured in IT, in a data upstream position, or none of it's captured in your account setup, that means that our tax analysts now have some sort of manual process that they need to go through, right? Even if your data is already clean and normalized, you still have to break these things out in the spreadsheet, and that equals manual activity. And I can speak very pointedly to that situation because I was in the exact same situation where you've got this list of thousands and thousands of transactions. And again, even if you want to assume everything else is good, you still need to cross-reference that via some sort of manual process to see who are my tax-frees, who are my governments, who are my exempts, who are my taxables, and even vice versa on the purchase side, right? Does somebody bill me tax? Do they always bill me tax? Did AP catch it if somebody billed me tax and they weren't supposed to? And now you wind up going through, on the AP side, I think, even more difficulty, right? Now you've got your tax analyst looking through invoices to find out whether you paid taxes or not, so you know how to report them. So again, the more data you have available, the more checks and balances are kind of in place. Typically, the easier we'll see that tax process be later on. The other part starts to be capturing information that is really only tax relevant. This is kind of a risky situation. Typically, if I talk to an organization where I know they have a dedicated tax department, right? It's tons of fun to rip on IT and rip on the traders and the marketers, right? The guys that basically cause problems for our tax team. But knowing, right, and being familiar with some of you that are on this call and knowing how your organizations work, right? There's a lot of overlap there. We are not talking, we're not talking about organizations that have thousands and thousands of people and have these dedicated teams. So there's kind of some opportunity, I think, for you guys here because there's that buy-in, because in smaller downstream organizations, yeah, you're faster, you're more robust, there's more sharing of workload, there's probably a lot more communication, the opportunity to see where you can improve your processes, because everybody's in this together, so to speak, a little bit more so than I think you'd see upstream in your much larger organizations. And again, those are things like federal ID numbers or your local jurisdiction information, right? Most people are not going to care about your Florida DEP number or which county you're in Georgia or Alabama, aside from the tax setup, right? It doesn't really affect your margins. It doesn't affect, typically, I would think, your ability to sell into those areas. So if a salesperson or a marketer said that the only thing we need to set up this tax return, or excuse me, to set up this account and bill taxes and invoice for product is a city and state, that might be the only information that you guys are able to capture, right? A federal ID number is not really needed for any other sort of compliance that I'm aware of on a regular basis, other than tax reporting. So a lot of times we see this disconnect where we know the tax people are the last ones to get what they need. It's not a revenue generating part of the business. All the revenue generating parts of the business are typically going to get what they need first. And we don't want to stand in the way of letting a salesperson go and sell product because of a tax need. But then you have to start kind of recognizing that not capturing that information is going to hit your bottom line, further on down the road, whether it's because you can't recoup those taxes because you're not licensed, or you get audited and things like that. So again, we typically see that tax unfortunately needs information that is irrelevant to the IT and data requirements of pretty much every other organization. So tax team is left to kind of pick up the pieces there. Credit and rebills is a funny one. This is something I can tell you that nobody has credit and rebills figured out. We've been asked at Avalara to build custom solutions for it. I've worked with people that are doing multi-million-dollar implementations of SAP or Oracle, and they can't even figure out good reasons to do it. So credit and rebills are one of those things that you kind of have to be aware of, and it's great if you have ways to recognize it and identify it, but I can tell you that that is a pain point for everybody. Knowing, is there a relevant tax or IT change, tax or informational change, right? If you credit and rebill something, and I know very, very frequently I've seen credit rebills are simply because of the dollars. Somebody pulled on the wrong account, so they got the spot price instead of a contract price, those types of things. So you have lots of credit and rebills going through simply to adjust dollars, and that comes through your tax feed. Well, how do we know what to do with those? How do we know if there's a relevant tax change? How do we make it easy on the tax analysts to know if I'm just changing a price, I can probably ignore this credit and rebill. But if I've changed, for example, the delivery location, that's a much larger problem, right? So again, the normal course of the business can create significant tax reporting issues if we don't have IT pieces set up to look at it. And then you've got simple stuff, data entry and order accuracy, right? If there are no checks and balances, if your IT or your back office system does not lock down what certain people can and cannot enter. For example, could you pass an order through without a city? Can you do it with just a state? If your IT or your back office system enables users to do that, then I assume when you get down to tax filing, you wind up with a lot of data that is missing simply because somebody upstream was not forced to do full due diligence. I see this all the time. Specifically, again, being able to rip on marketers or traders or things like that, right? Typically somebody doing the dispatch or somebody entering the order and trying to get a new account set up, they're just looking to get that bottom line in there. They may not understand the implications of having that correct tax information. And so if your system does not, either from a technological standpoint, IT, or from a sort of a business workflow and a sign-off standpoint, if you guys are allowing transactions to go through the system without a minimum required piece of tax information, again, we know that's a big piece that the tax team in quotes, tax person or tax analyst needs to compensate for further on down the road. And then you've got your data availability, right? What kind of reports do you have? How many data elements are coming out? Sometimes, again, we know IT might not be, super thrilled to be allocated to tax. I'm sure, every IT department has a laundry list of requests from the business to work through. So if tax comes and says, well, we just started reporting in a new state, we need this new piece of information, even though you have to file next month, typically there's a hard time getting that sort of prioritized from IT and getting those custom reports. And this is something we'll talk about a little bit later as well, the benefits of sort of a generic tax report and how do you decide what to put on IT versus what to manage downstream in the human process. We're going to talk a little bit now kind of cost of compliance. This is really the second challenge, right? Is that if you're not a large organization, you don't have a dedicated tax person. Maybe you're lucky enough to have a single dedicated tax person, but we're going to see in the next slide actually, can this person actually account for everything? Everything that could fall into this tax world, and then that situation gets exponentially more complex if you don't even have a full-time dedicated tax person. So this is kind of a cool combination slide I cooked up recently. We've been using this during some of our sales and marketing presentations. I've been using this slide for helping clients understand the complexity that goes into configuring a tax product or what your world is, right? And again, not knowing exactly the roles of everybody on this call, I'm sure you guys have all gone through experiences maybe with a CFO or CEO or somebody who might be a decision maker in a tax capacity. They don't, sometimes you don't really realize how complicated this is and why this is such a big deal. And that's actually what I've been trying to do with this slide recently is in a snapshot, let's actually look at how complicated our industry is. And looking at the supply chain and realizing that as you move down this supply chain, you kind of there might be a less and less responsibility, right? We know that typically auditors like to go up at the refiner or the supplier level. So if we're a downstream organization, we might be avoiding the spotlight simply because we're not moving enough gallons or enough tax liability. But as soon as auditors and the government start getting done with those larger filers, and especially as we're moving more and more towards e-filing, that enables auditors to handle more audits, more filers at the same time, I think we're going to start seeing that spotlight kind of come more to us on the downstream side, and start making sure that we're staying just as compliant, because we know governments are looking for those extra dollars and cents. So even though we get maybe a little less complex from a business model, and maybe our tax revenue goes down as we move downstream, there's a lot more room for error here. And again, that's because you start to get into these things: special tax jurisdictions, state, county, municipal, right? I mentioned that a little bit earlier. At the space that we're talking about here, you guys start getting into sales and use taxes. So now we're not only worried about, is my excise tax applicable, and is it taxable or exempt? Well, it's okay. Now, if my excise tax is exempt, is there a reason that I should charge sales and use tax? And is that exempt or not? So things get much messier. And yeah, I don't think you realize sometimes until you look at this, until you kind of look at full spectrum, what does our industry actually look like? So on the left here, we've got, who are the major players, what are the different areas we're in, what are the different products that we're in, and that's not even going down into the ever-changing environment that is biofuels and, alternative fuels and things like that. That's a whole other, kind of level of complexity. But then you start to look at, well, where are we in the business processes as well? So we created this thing called the Business Activity Catalog that just sort of summarizes what are the basic types of business activity is really the best word for it, right? What are the common types of arrangements that somebody would have to deal with in our industry? And I can tell you guys that none of these are particularly specific to our space downstream. A couple maybe, right? If we talk about movement types as above the rack versus below the rack, if you guys don't have 637 registrations, perhaps you're not moving things along the pipe. But I could tell you, for every time I have somebody downstream that is mostly in the retail space, there's always some weird thing. Somebody's trying to, somebody in the revenue generating side of the business is trying to, get that extra margin somewhere, and now they're buying fuel in the pipe, or now they're trying to move a couple things around, especially if you're getting into specialty products, jet fuel, racing fuel, avgas, where other larger players may not be in the market yet. Now you start really blurring the lines. And this is actually a very sensitive topic for me, because I've been going through this recently with management on our side ourselves, is that if you guys are looking at this activity catalog, right, there's really not any way that I could drill down on one of these things, again, except for perhaps above the rack or below the rack, and say, sure, only the most complex companies do this, or the most downstream companies don't ever do things like that. It really doesn't work that way, right? We're really only ever talking about economies of scale when we talk about the difference between you guys and, again, like someone like an ExxonMobil or a Shell. But everybody's moving fuel around at the rack, via truck, right? Everyone's moving fuel around via rail. People have transfers and book adjustments between themselves and other parties. You've got throughput agreements. You've got exchanges. You've got flash title agreements. You might be pulling out of your own facility or your own throughput, or you've got some sort of, again, flash title arrangement, third-party arrangement with the supplier. So you guys really have the exact same complexity. And then the question is, well, how do we really deal with that? How do we handle all of this same complexity just in a shorter geographical footprint, or in essentially a smaller volume? So a lot of things to think about, and this is really what drives your cost of compliance, because our industry is so complex. So how do you manage that complexity, right? This is where I think the human aspect of your cost of compliance comes into play. Is that, I mentioned earlier, are you fortunate enough to have a dedicated tax person? I can tell you guys, I've worked with companies where the tax person is like a VP of human resources or something like that, simply because all of a sudden a small like regional home heating oil company wanted to get involved in some dyed diesel for off-road usage, and then that leads into clear diesel for off-road usage, right? All of a sudden you're putting fuel in somebody's backhoe, and now they're taking it on the road, or they're using it on the highway. They're not just using it, off-site at a construction site. So now all of a sudden, in order to service your customers' needs, you want to go out and get licensed for these new types of licenses to do these new types of business, just to simply service your existing customer base, so that they don't go elsewhere to somebody else that could do all of it. And so in those situations, right, all of a sudden a small company goes from having no tax implication, no licenses needed because everything they bought and sold was all taxable or all tax-free, and things just got passed through, to now I have a burden and a need to file a tax return. That gets really messy really fast, and sometimes that just gets dumped on whoever was available at the time. I've gone into companies where the CFO is doing the tax returns for the exact same reason. So kind of the things you really want to think about. And again, I'm not suggesting that every company out there downstream should immediately go out and hire somebody to do all of these individual jobs, right? We know it's physically impossible. There's resources to consider, there's cost to consider, things like that. But what I'm sort of kind of want to juxtaposition here for you guys is what we see sometimes as like the tax utopia, what you would do in a perfect world, versus how do we at least service those same needs, but with less people. And all of that is completely possible, just as long as you recognize these are the areas of coverage you really need to account for. So what you've got here is really talking about this chronologically is account setup, right? This is your upstream data. Is what sort of, I mentioned this on the RIT slide as well. How do you guys handle the setup of taxation? Is this somebody in accounts receivable that's doing this? Is there a clerk or somebody in dispatch that does that? Does the tax team or whoever your tax supervisor is have approval on the setups? And this is how you kind of avoid your one-time setup problems, right? So that somebody doesn't get invoiced incorrectly. This is where you start getting into the value of sort of a tax calculation module as opposed to account by account setups. Who is staying on top of the local warehouses, or wherever fuel is set up? Who's making sure that you have licenses in W-9s and things like that before product goes out the door? I can't tell you the amount of stories I've heard where there was no tax check-in process, and all of a sudden, a month later, a tax analyst finds out that you're now selling fuel in a state you've never been licensed for, because a marketer had an opportunity there, wanted to service an existing customer in that new role. There was no heads up, there was no account set up, and a marketer comes in, or a sales guy or whoever comes in and says, just tax them the way we've been taxing them everywhere else. And then all of a sudden, you've got transactions going out the door that aren't getting taxed in states where you don't even have a means to remit the tax, and you don't have the proper documentation on file, right? So that's almost all 100% human process, but there are things that you could support IT to put checks and balances for. And would love to hear at the end, or anybody has any questions or anecdotes about how they might have remediated that process. Again, really, really fun for me to beat up on the sales guys and traders and things like that. Return preparation. So this is the person that's ultimately filing the tax return, right? And honestly, I could have put this in flashing neon, right? This is typically where our focus starts, right? That's sort of our trigger. That's the thing, the deliverable that's going out the door. That's the clear and present. If I miss an account setup, and I don't have checks and balances in place, I might not find out about that until I do a return preparation. I might not find out until I've paid, I've got my check cut to the government. And then ideally, if you guys are doing, for example, general ledger reconciliations, okay, let me go see how much tax did I collect versus how much tax do I owe. Oh, geez, according to my process for my tax return, I owe the government X amount of money, but I haven't collected that, on my books and in my AR. How come? Maybe that's where you identify something if you're fortunate enough to have enough time to be able to go through that process. So the return preparation really becomes our here and now. That's where people recognize problems. Unfortunately, that is really smushed together with the manual overhead of preparing the return, right? If you're only doing your due diligence isn't the right word, but if you're only doing your review and sort of your gut check about, hey, in the past 30 days, did I tax everything correctly? And you're trying to wrap that process up into, well, not only do I have to check and make sure I did things correctly, but I also have to assemble the return. I have to play with spreadsheets. I have to do electronic filing. Really tough burden to put on somebody to be able to do all the different pieces of that within the same time. And then you've got research and audit. And I'll tell you, there are very, very few companies I've seen that actually have a research audit team. I'm just throwing it out there as a utopia, right? There's almost no expectation. It's rather unreasonable to expect that anybody except the largest filers would have a research and audit team. But then the implication is, well, what happens when you do want to go into a new jurisdiction? Who do you reach out to? How do you find out what the tax implications are for these new jurisdictions that you're going into? Even if you have a good relationship with an auditor, who's to say you can just call up and, auditors are, I think, notoriously closed-lipped about exactly putting in writing something for you to do. So you've got the research of going into a new state and the risk and cost if you get that wrong. And then you've got audit. Maybe you've never been audited before, but then all of a sudden you get audited that one time and you've got a part-time person doing tax returns. That person's got another job the other 3 weeks out of the month. And now all of a sudden you have to take somebody out of the mix to spend a bunch of time with an auditor. So lots of considerations go into how you manage these three issues. I'm trying to see if there's any things that I've got here too. Here's a kind of a good point as well, when you're doing those account setups. So we talked about this piece here. I think the only thing I really missed was this onboarding time. Is how much time does a sale marketer, what's your kind of internal SLA, I would say, what's your internal expectation for the tax team to turn around any sorts of approvals and things like that? Does the tax team get a 2-week approval? Do you get to worry about getting those getting documents from customers? Do you have time to look into the customer's business model? What are the timelines? What sort of reference data do you need? Do you need licenses? Do you need to know, are you selling specialty products? How many different sites do they have set up? Do they have exemptions? And if you don't have enough time to do that, again, but I feel like the worst kind of version of that situation that I've seen is, fuel's already going out the door and you didn't even know you had this customer, never mind having the opportunity to get in place. Usually this is where I kind of throw in what I'm going to is anyway, the sort of the snarky comment, right? About if you're waiting to get those, documents back from your customer, you're waiting for tax data, the easiest thing to do is just tax them, right? I guarantee you start taxing them and all of a sudden they're going to get back to you with that paperwork. There's another part here though as well that falls into this lead time, and it's not something that this is probably a problem upstream, downstream. It's not something you can necessarily remediate with headcount, but it's definitely something I've seen sort of in the downstream space, right? Is that the customers, you guys are put into possibly the most difficult situation of anybody in this supply chain, because from here, where you guys might be operating, you're now selling to the end users, right? Who are, like, by definition, the least savviest people when it comes to this, right? They don't necessarily need to know what taxes, especially if you're going to the pump or you're only operating, in one particular space. You're a construction company. You're always dealing with taxes. So you guys are put in a position to have to deal with your customers' knowledge gap as well. I've seen this before where, a marketer comes in, they're trying to, service a new customer, and they say, oh, yep, they say they're exempt from all taxes, and here's all the documentation. And on my documentation is maybe a W-9. I've seen a W-9, a certificate from the Secretary of State saying they're authorized to do business, and like a single generic sales and use tax exemption, right? Which doesn't really answer enough questions, right? Well, what about the excise taxes? How are they using the fuel? And I've been in situations where we're gonna lose the business. This customer should be getting taxed, but they're dealing with some other supplier who does not know what they're doing either. And well, my other supplier isn't charging me, so how come you guys are charging me? So now you're stuck with dealing with the customer's knowledge gap. And how do you handle that? What sort of sensitivity is your business going to have to either trying to educate this person, or are you just going to eat the taxes? And a lot of times that will get suggested until you go and tell that trader or that marketer or that sales guy that those taxes have to meet, have to hit their bottom line. That sometimes the taxes are not sometimes, usually the taxes are greater than the margin on the fuel in a lot of these cases. So there's a lot of stuff that you guys can be put into a situation for. and you can process all you want around it, but then you still have to deal with, well, what if the customer is going to take their business elsewhere? How do you educate the customer? How do you make sure that you're doing the right thing? And again, that all really flows down to what sort of lead time do you have before you set up this, before you get working with this customer. And then of course we've got staying up to date, which is actually the big focus of our next section is, how do you guys know when these things happen? I've heard lots of horror stories, especially you start getting into like Alabama, Louisiana, right in the South, generally in the South, not even the Southeast, like generally in the South. There's a lot of county-based situations. Texas has them. New Mexico has special jurisdictions. Arizona has special jurisdictions. Sometimes they're counties, sometimes they're zip codes, sometimes they're school districts, sometimes they're police districts, right? How do you go about getting all of this information? How do you know if there are the updates? How do you know if something even falls in the particular jurisdiction you're talking about? How much lead time do you get? As an example, this is specific to like an electronic format, EDI changing formats. The end of 2017, Texas was updating their EDI filing process, and they released a specific spec. And I can tell you on our side, we were kind of hounding them to get that information to us. Hey, can you guys work with us? We want to know what this is. We want to make sure we're compliant. We want to test the file. And then lo and behold, we went to month 1 of this new change being required by the state, and it turns out that the spec they had released was incorrect. So they've changed something. So not only did they not get the information in a timely manner, but the information they did produce was not correct in the first place. And how are you guys expected to account for that? Where do you get that information? Again, going back to the previous slide, if you don't have somebody whose only job is dedicated to getting on the phone and hounding auditors when they're not being helpful, or trying to do the tax research, it's really putting everybody in a kind of a sticky position to be able to account for those types of changes. And then you've got sort of your update process. Let's say you were fortunate enough to know that these things occurred. Who owns that? Is somebody going in and manually affecting the tables? Do you have to manually adjust the rates? Do you have to hand that off to somebody in IT who then runs that update process? What happens if we're talking about a taxability change? For example, we used to treat ethanol as a gas product, right? So gas blends, E100, and gas alcohol blends and E100. Let's say we're all being charged the same tax, and then all of a sudden we decide to break out ethanol to a different type of bucket, right? South Dakota does some stuff like that, where they have different rates on pure E100 versus gas and where the tax is incurred. That's a large architecture change to the tax tables. What kind of lead time do you guys have? What kind of support do you get from IT? How do you manage those things when they change, and what happens when you don't have a lot of information for them? All key problems with staying up to date. And again, these 3 things right here, or these 2 pieces, I'll say that's not unique to you guys. That's not unique to the downstream space. Upstream has that as well. The question really becomes, who has the resources, and how do you account for that, and how problematic is it for you when these things occur? Let's say you miss a rate, right? I've seen states that do retroactive taxes. I think Texas is notorious for that as well. I don't know how many people on the call are in Texas, but they'll publish a rate on the 10th and say, oh yeah, by the way though, this rate is effective back to the beginning of the month. Well, how many people's customers are going to be receptive to that, right? That goes back to the last conversation, the last slide, about what happens when your customers have a knowledge gap. If you guys pick up that tax change before your other supplier, now you have to get into a battle of wills with the customer to prove that they're right or not, or they're not. And the customer's not doing their own research, right? They're not if they are not a tax filer, that burden falls on you guys. So what I wanted to do is sort of outline for you guys some resources as well. One of the things I have really noticed, particular to this space, I've seen this at our own Avalara conventions and meetings and things like that. I've noticed this when I go to FTA or API. Actually, the one place I would say I have not noticed this is at the Cargas Energy Summit, right? Because I think the Cargas team does a great job of getting all of you guys in there, and they have such a great reputation and for quality of that meeting, that typically when I've at least attended the Cargas Energy Summit, we see lots of key players attending this meeting, getting lots of good information. That type of forum that you guys have of being able to get lots of different information from lots of different partners and lots of different vendors does not really extend out to very many places. Typically at API, you might see VPs and stuff like that, CFOs, because API has a general, broad appeal for our industry in general, right? But you may not see those people. You may not see a tax person attending API, so they might miss out on a key point. Same thing with FTA, where when I've attended FTA, and if any of you guys are not aware, I do highly recommend you attend FTA, especially for the tax space. It's even better. It's even better than API. API is really cool. They're very cutting edge. You get a lot of information if none of you have ever gone. But FTA is like hands down the best place to get better at doing taxes, because you get to rub shoulders with other people that are in the same space as you. There's a lot of knowledge sharing. It's a great place to go and meet your auditors. I can't tell you how many times I've been able to fix my problem or get help with an audit solution or get help with penalty and interest, simply because I had it. Now I'm on a first name basis, or I've recognized this auditor. You get their business card where you're at FTA. You call them up. You find out what's going on. Really great resource for you guys if you're not attending. One of the problems, though, is, again, it's hard to get a person whose full-time job is not tax to get out of the office for 3 days to go to an FTA meeting. So I can very much understand that that problem. We've got CCH is actually what my team uses internally. It's what Avalara uses. It's a Wolters Kluwer product, and again, I don't know that necessarily there would be a need for you guys to I'm not going to say just go sign up for CCH, but there are resources out there that at least make the code section a little bit more palatable. That's what we use internally for our research. Our dev team uses it. And then certainly anyone that's engaging with Avalara, we take everything that we've learned and we condense and we make that available to our customer base, what the rates are, what the changes are. We don't really give tax advice, but we at least make the information available to you guys. I think there are probably some other resources out there. Again, would love to hear any feedback if anyone has other recommended wants to share with the group, places they've gone. So 2018 content changes. I went back and kind of summarized a great deal of what we've put out in the last few releases. I won't itemize all of them. This PowerPoint will be shared for you guys. You can go through and see. I have put the information out there because we wanted you guys to get an immediately tangible benefit, hopefully, out of this meeting instead of just my conceptual or process-oriented ramblings. Wanted to give you guys something really definitive and tangible that you could take home and use. So summarized on this slide are the different states, and again, I curtailed this ideally. I didn't put any tobacco information out there or alcohol content out there for you guys, which is also within our product. I tried to keep it mainly to fuel and sales and use, and tried to keep it to jurisdictions that I know attendees on this call are attending. But if anyone has any questions, you're more than welcome to follow up with me. And this, as a kind of a general disclaimer, this is not the only thing that Avalara has released in terms of content, but this is what you guys will find at the end of the presentation. And an example of this, right? Some big changes coming for March. I think Alabama had some stuff in March and April and June. They changed several different things. They had the local options, they had the sales and use, the city sales and use tax, and then they had some differences in what they were doing with that T-SPLOST, the transportational local option sales tax. So what we've got at the bottom of the presentation, I think there's three slides of Alabama alone, of all the different counties, when the rates are effective and which rates changed. So I know from even talking to historical Cargas clients that have become some of our clients, Avalara clients as well. I know Alabama is typically a very, very large problem because they have so many counties and jurisdictions. As far as I can tell from looking at the rates, they don't have a particular amount of sanity about when they change the rates or what they change the rates to. So that informational piece for people to stay up to date on is very, very challenging. I also threw out there some form changes as well. To be honest, I think that you guys as the filers, especially if you're a registered filer, probably have a better time of getting these in Avalara. We have to do a lot of due diligence on our end a lot of times to find out about form changes. Because we're not a registered filer, the governments don't just send us new versions of the forms. So if the government is one that doesn't play nice and doesn't make them readily available, sometimes those are challenging as well. But I've also summarized just like a few of the states where we had relevant cosmetic changes. So where the state actually published a change to the tax return, not just where Avalara adjusted some sort of coding or something like that. So I threw those out there for you guys as well, where you might want to be aware of, hey, did I receive this newest version of the form from the state, or do I need to go look for that? And again, hope that that will be a real helpful, tangible takeaway for you guys. A couple more examples of some content and form changes. So we're going to talk a little bit about, I've thrown a whole bunch of problems at you guys. How do we remediate some of that with our integration with Cargas? One of the things I talked about on our IT slide was the benefit of sort of a data standardization, right? Of not having to go back to IT, and we've seen this a lot. You got to I'd say play your cards right, maybe. With IT, that's at least my personal experience, is you go back to IT or you go back to the business and you push really hard for the things that you absolutely need that are, business critical, and you try to set up some sort of generic approach whereby you can handle, at least you've got enough information to handle the custom stuff. A lot of times we've gone into other legacy clients and IT has some sort of 15-year-old report, and they've got all these different reports for different states or different types of business, the refined fuels line versus tax and equipment versus, different states have different things. And that starts to get really, really messy, right? IT doesn't want to have to manage a bunch of different reports. It's a non-standard format is not particularly easy for the end user in terms of setting up processes around, Excel. Let's assume it's still manual, right? You want to have consistent formatting and things like that. So that's something that we've really done a great job at, I think, with the Cargas relationship. There was a lot of buy-in from both sides. There's a lot of sharing of requirements and availability and information and things like that. So while there's still some burden on you guys as the end users to make sure that the quality of the data is correct, we've handled pretty much the rest of it in terms of pulling out all of the information that you guys need to do your filing in almost every state. And I can also tell you from going through a couple of projects with mutual Avalara Cargas clients too, that there's been a lot of I can't think of the right word. A lot of buy-in from the Cargas team as well. We've made a lot of support there. Things that we might have missed in the very first creation of this data extract, we've updated as we've gone along, and as we found other requirements that we haven't thought of, we've had again a lot of buy-in from both sides and making sure that that data extract stays consistent, up to date, and servicing all of the different needs. So the first thing that's kind of important is flexibility. So with our standardized approach with the Cargas data report, we know we have a handle on the different ways you guys might be doing things or what the different needs are. So we've got a handful of reports out of the Cargas system that are all available to you guys by going with the Cargas Avalara module, and that include things like a list of a file report for all the buyers and all the destinations, all your sellers, all of your carriers. So there's a single transaction file that you would file every month, but we have supporting information as well that enables both you and us on the Avalara side to really get a handle on how you're using Cargas and make sure that you've got then on the filing side a solution that's set up in sync with how you're filing in Cargas. Again, I mentioned it was a collaborative approach. We've got a lot of buy-in from both sides to make sure that we're servicing the need there. So the beauty of consistency in data formatting is, again, we now can start to put best practices in place, right? We know that across all jurisdictions, you've got one standard file out of Cargas that captures all of that transactional data. We don't have to have a separate report for Tennessee and a separate report for Alabama and then figure out how to manage imports and exports between the two differently. You've got one standard transaction file that comes out with all of your data for all of your reporting. Definitely speeds up the implementations because now we know what that file is going to look like. We're not having to analyze multiple different points of data. Minimal custom work. Again, we can by knowing that there's a standard way that Cargas implements, a standard way that you guys use Cargas, it enables us to put a standard way that we would implement a Cargas customer. And there's a couple of different flavors about that, but again, we know what those different flavors are, and then we're able to work with you guys to figure out which methodology is going to be best. Expected gaps, right? Tax engine and master data tables is then things on the Avalara side. We know what sort of information Cargas stores and what kind of information it doesn't store, and the information that it doesn't store is really best suited to be within the tax engine on the Avalara side. So things like converting your product codes, right? Is E10 always the ethanol product code, the gasohol product code, or are you still using 139? Are you using 124? Is there a product code that's called quote unquote gasohol, like Illinois used to do? All of that is managed very easily within the Avalara system, but the availability of those Cargas reports enables us to set up that information. License management, right? We typically have not seen people storing license numbers within Cargas, but we know that there are a handful, because this is only, right, this is really only a reporting requirement, right? You typically don't need to put a license number on an invoice or anything like that. We know that there are a handful of tax returns, a handful of states, North Carolina, South Carolina, Virginia, West Virginia, Delaware in some capacity, where you need to put license numbers on the actual tax return. Florida, where you need to put DEP numbers on there. Pennsylvania just recently moved to having to put the underground storage number on the tax return, right? And I won't rant anymore about that disaster, but we know that states have specific requirements about numerical information that you'd have no reason to capture in your system of record. So we have Avalara kind of set up to handle those things, and we have the available data out of Cargas set up to make that as easy as possible. So what are some of the kind of the key data points about that transaction? I mentioned your buyers, your sellers, your carriers, right? We have reports for your counterparties. We have reports for your locations. So the Avalara team could look at your data out of Cargas and say, okay, well, you've told me that you're filing in all of these different counties, but you don't have the county stored in Cargas, or you haven't presented the county in the way the state wants it to be done. So let's make sure that we have an activity to clean that up within the Avalara system. That way you don't have to change what you're doing in Cargas. With some mapping, we can make sure that the tax team can own the stuff that is specific to tax, and the rest of the business can own whatever they need to own, right? And typically we know that you guys people label accounts sometimes as something that means something to the business, whereas on the tax side, we really need city, state, and county. Like so-and-so's rack account, or so-and-so's construction site. Stuff that's not an official reporting name, but it means something to the business. We get all of your basic transaction elements, modes, product units, things like that out of that Cargas feed, all the critical information, mission critical information. And as I mentioned, the master data, by having those reports out of Cargas, we can holistically look at your Cargas setup and then make sure we do something that works within Avalara. And then one other kind of cool custom piece is the tax schedule. We've actually recently modified this. We can receive the tax schedule code out of Cargas as part of that data feed, and we can treat that either sort of as like a license, or we can treat it as a custom value on the Avalara side. And that lets you guys see on your reporting side a kind of a connection between how you taxed in Cargas versus how you're going to report in Avalara. And it doesn't need to be used all the time, right? But if you start getting into situations where you need to know, okay, here's somebody that should have, I'm selling dyed fuel, and technically the sales and use tax would have been applicable, but the excise tax isn't, but they have an exemption. How do you differentiate that versus somebody that does have the exemption? So by having the tax schedule and being able to receive that list and see how many different schedules you guys use, we're able to give you sort of a custom, last-ditch effort if we need to be able to reconcile how we invoiced versus how we need to report on the tax return. So that was a pretty big win for us right there. And then just really quickly, I know not everyone might have been even aware of what the Avalara Returns Excise, or ARE as I tend to abbreviate it, the Returns Excise product could do, or, we just spent all this time talking about the benefits of compliance, Cargas data. Well, what does this Cargas Avalara relationship do for me, right? So quick example here, this is like a high level, and this will be a really great slide, I think, for you guys to take back. If the Returns Excise product is brand new to anybody, by all means, take a look at this slide. This is this is actually a sales slide that I've pirated for my own uses very, very frequently, because it's a very, very nice view into what our product actually does, right? We start with your back office systems data, and this is typically a very large part of a professional services, my team's implementation project. We've got this mostly buttoned up with part of that Cargas connection. So that integration really gets you guys off on a good start to using the Returns Excise product. Looking at your data, making sure it maps over to our system. Then the system is set up to take all of that data, and according to rules that we have as core content, but rules that the services team would run by you guys, what schedules are you guys using? How do you decide if something is tax-free or taxable? Import-export situations, what is reportable, what isn't? All of that is configuration that we set up specific to your business to generate the tax returns. So basically take every manual aspect that you guys do of producing a tax return, from data cleanup to signing the piece of paper, or maybe putting the calculation on the piece of paper. You guys still have to sign it. We produce a signature-ready form though for you, and everything in the middle we're looking to automate. Product code conversions, your tax logic, your data normalization, any weird cleanup that you need to do state by state. We're trying to get your tax people out of playing around with spreadsheets and raw data to take us all the way back to that challenge at the very beginning, is how do we empower you guys and give you guys time back in your day to do all of that other nonsense that is required in being tax compliant, the most manual of which, and honestly the least value added of which, or the most human risk, is just playing around with those spreadsheets. And then you've got some validation to determine that you guys are putting the right things on the right schedules. Did you put a product, did you put gasoline on a schedule that is only dyed diesel for off-road usage? Things like that. We have some validation in there, generating the return. I'll give you guys some tools to review it and audit it and do a transaction comparison. And then finally, filing the return, whether that's paper or EDI. Any state that has a mandated, and even most of the states that have optional e-filing, Avalara owns all of that. So you guys don't have to go through other third parties to convert your data. You don't have to ask IT to do it. That would be an opportunity, I think, for people to move from doing spreadsheets that they manually upload to, say, like Oklahoma or Georgia, I think does that, and come out to XML or the macros or whatever files they're currently using. We've got some of the key kind of benefits of that platform. Productivity is really the biggest one, but slowly beneath that is errors and risks of penalties, right? Is the faster you get your returns out the door, and the less human aspect there is in that, the more the less risk you're going to have, right? You're not accidentally putting something on the wrong schedule. You've got more time to actually do compliance value-added activities rather than playing around with spreadsheets. Having the Cargas implementation, the Cargas integration, drastically reduces the implementation time and cost, because we're dealing with sort of some knowledge sharing and known quantities on each side. And again, having that ability and the content that we produce and things like that gives you guys that extra business agility to take ownership of the system, move into new jurisdictions more quickly. Ramp up your processes for those. Again, you've got a Cargas data extract that's immediately ready to kind of move with you. You don't have to go back to IT and say, we need this new report for this other new line of business. So really reducing your IT costs as well. And here's just a quick kind of slide, recapping some of the things I've already talked about. Basically, what are we automating with this Excise, Avalara returns Excise, and specifically Avalara to Cargas, right? We're getting the data scrubbing, we're getting your jurisdictional specific values, and we're basically taking you guys from data import to a signature ready form.